As I'm sure you've heard on the news, the trade war between the United States and China is officially over as of May 12th, 2025. Except that it isn't. A 90-day pause was initiated to allow for further time for negotiations. But the stock market is soaring, so the market investors must think that it's over. I do think this is a great time to kind of reevaluate the situation and ask a pretty important question. Is the United States better off now than it was before the trade war? Because isn't that the whole point of negotiations and trade wars, to make the country better off than it was before? Well, let's talk about it. As always, my name is Derek, and I got my degree in finance, so you don't have to. Let's dive right in. So, you may or may not be aware, but this trade war really started in 2018. As in under Trump's first administration. And then a lot of those tariffs were left in place by the Biden administration, as well as new tariffs being implemented, like tariffs on electric vehicles. So this trade war has been going on for a while, though the most recent escalation of this saw both countries, the United States and China, go well over 100% tariffs on each other. That, of course, slowed down businesses. There have been reports of shipment cancellations across the board. There are reports like Seattle saying that they don't have any ships in the harbor. This is because of that most recent escalation. Now, what has happened is that both countries have agreed to lower their tariffs to a base 10% on each other for 90 days while negotiations take place. Except for the United States, it's really actually 30% on Chinese goods, because this is on top of an already existing 20% tariff, which is meant to fight fentanyl. So you have 30% from the United States, you have 10% from China. So let's ask the question of this video. Did the US accomplish anything with this escalation of the trade war? And more importantly, is the US better off? Okay, so to begin, I first have some numbers here that I want to read. These are the base numbers, they're very important. Okay, so in 2017, this means before the trade war even started, the United States had a 2.7% average tariff on Chinese imports, so exports from China. The PRC, the People's Republic of China, had an 8% tariff on US goods entering China. So that is significantly higher. It's about 3 times higher than the US rate. With that said, as we progress through time, so then Trump was inaugurated and he begun the trade war in 2018. By 2023, the rates for the United States was 19%. That means the US had a 19% tariff on average for Chinese imports into the country. China had a 21% tariff on US goods. So in 2023, the rates were very similar, 19 to 21. Okay, now we come to 2025, when there was a serious escalation. In March, the United States had an average tariff rate of 39% for Chinese imports. Then by April 2nd, they had a 73% average tariff rate on Chinese imports. And then, of course, most recently, 164%. China kept up. April 2nd, they had a 55% tariff on U.S. goods, and then up to 146%. So this has been an escalating trade war. What did we accomplish? Well, first we have to ask ourselves, what was the goal of these tariffs? And in my opinion, it's kind of muggy and hard to figure out, because Trump has said 3 main things, and in a sense, they all kind of contradict each other. He has said that tariffs were meant to bring back manufacturing jobs into the United States. He has also said that it is to isolate China on the world stage. And then he has also said that it is to be treated more fairly on a global trade scale. The problem is when we use those 3 different metrics and we look at the tariff behavior or the implementations of these tariffs, they don't align. So what I mean by that is, okay, let's take the first one. We want to be treated more fairly on the world stage. If that was the goal, it seems more logical to just use reciprocal tariffs. So if Great Britain has a 10% tariff on our t-shirts, we would put a 10% tariff on theirs. If China has a 30% tariff on our cars, we would put a 30% tariff on theirs. We wouldn't do these massive escalation of tariffs if the goal was just to be treated more fairly. It'd be boom, boom. Boom, boom. It would just be reciprocal tariffs. Okay, then instead, let's say that it is to bring back manufacturing into the United States. If that was the main goal, then it seems more reasonable or logical to just pick a tariff amount, not something crazy like 150% plus tariffs, just 25%, 50%, and just leave it. There wouldn't be any negotiation. There wouldn't be any back and forth. It would just, that would be how it is going forward, and you would hope that manufacturing is brought back into the United States. And you'd need to leave those tariffs for a year, 2 years, 3 years, 5 years to allow companies time to bring that manufacturing back. Okay, then instead, Trump has also said that it is to isolate, and people have theorized that it is to isolate China on the world stage. China is basically our adversary, whether we like it or not. I mean, their ideologies are different from ours, right? They are more, they are an authoritarian government. They're not a democratically aligned country. So if it's to isolate them on the world stage, well, then you would just put massive tariffs like the ones that were implemented, 140, 150% plus, but you wouldn't also put all those tariffs on our allies. You wouldn't do all these random quote-unquote reciprocal tariffs on a ton of our allies. You wouldn't cause havoc, and you wouldn't just not differentiate between friend and foe. Because if you're going to isolate a massive world power like China, you can't do it alone. You need a team of people, or excuse me, a team of countries to do it with. You would assume that that would be Canada, Mexico, Australia, every country in the European Union, the United Kingdom, all these countries together. Or so why would you just blanket random tariffs across everybody plus put a massive 150 plus tariff on China? So my major problem when we're asking the question, is the United States better off? It's what goalpost are we using? And if all three of the main ones, none of it really seems to align. The strategy, it just doesn't seem to align. So then the question then becomes, okay, what about for the U.S. consumer? Are we better off? In that regard, there are two main things that we have to talk about. That is prices and labor. So if we're going to talk about the U.S. consumer, first we have to understand that this is a service-based economy. 70+% of labor and 70+% of GDP is tied to services, not manufacturing. Okay, that means healthcare services, finance services, tech services, hospitality services, all these different types of services, consulting. Okay, 7 out of every 10 plus Americans, their pay is directly tied to service-based GDP. Okay, so when you implement tariffs, whether they're massive tariffs, whether they're a little bit of tariffs, the point is you're going to increase prices. The problem is that 7 out of 10 Americans, really it's more, but 7 out of 10 Americans will not have a positive to counterbalance the higher prices because their pay is not really tied to labor, manual labor or manufacturing. So they're just going to be stuck with higher prices, and potentially they might even lose jobs because these companies that do have manufacturing and they have sent manufacturing overseas, they now have to find ways to cut costs. That could be job losses. That could be trying to hold down salaries of service-based employees. So there's a lot of negatives there. So really, the ones who benefit maybe are the 3 out of every 10 Americans that did have exposure to manufacturing. Some of those jobs have been sent overseas. So then the question becomes, do those jobs come back? And are they high-quality jobs? That means, are they parts manufacturing? Are they automobile manufacturing? Are they high-end welding, etc.? Those do pay well, okay? But is it going to be enough at a high enough volume to counter the much higher prices of all goods? And on top of that, will the jobs gained there counter the jobs that are definitely going to be lost elsewhere because companies are looking for ways to cut costs? So in my opinion, as a U.S. consumer, the answer is probably no. Also, what did we accomplish? It seems like we've gone backward. Now, I understand the idea of China. Really, we have a fix. The U.S. consumer has a fix of cheap Chinese goods. It is. We're obsessed with it. We're addicted to it. We do need to break that at some point. Okay, so I understand the argument. The problem is the way that it has been done. It just does not seem logically sound. And I'm hoping that I'm just a guy on YouTube. I do have a finance degree. I run a small business, small yet successful business, and I love this stuff. I've dedicated my life to finance and economics. I'm hoping that the administration has people significantly more intelligent than myself, as well as with much more experience that are actually controlling these decisions. The problem is, on the surface, it doesn't seem to be. It seems to be erratic or spontaneous or random. And when you ask other because I'm not here, I'm not just thinking of all my conclusions. I try to look at data, research, other economists, other finance professionals. What are they saying? Right? People who I look up to. And the general consensus seems to be no one really knows what the end goal here is. So, are we better off? I think as a U.S. consumer, definitely not. As a country, I think mostly no, because the goal is not clear. And I'm not really sure if we're isolating China, if we're trying to bring back manufacturing jobs, or if we're trying to be treated more fairly on the global stage. And on top of that, we've lost a ton of soft power, because how do you project power when you're all over the place when it comes to your trading partners, right? Your trading allies. Businesses and trading partners need consistency, and they need to be able, look, businesses don't like uncertainty. Trading partners don't like uncertainty. So they want to see that they can plan for the next 5, 10, 20 years, businesses and countries. So our friends, I think we've lost a lot of soft power projection because our friends on the global stage don't know what we're going to do next. So, I don't think we're better off now. We'll have to see in 90 days if these tariffs are implemented again, if they're truly paused, if some sort of negotiation takes place and a deal is reached. Only time will tell. I hope this video was informative. I hope it gave you another perspective into what is going on. If it did, please consider subscribing. It helps out the channel tremendously. And if you like personal finance, world economics, and investing broken down as simply as they can be, then you are in the right place. So I hope you stick around for the next video. Until then, I hope you have a fantastic rest of your week, and I will see you in the next one. Take care.